HP Limited is an excellent exercise which shows you exactly how disclosure of share capital should be made in the financial statements. So make sure that you can do it this way, make sure that you understand all of the disclosure requirements, and obviously make sure that you can do the question. You are provided with an extract taking the accounting records of HP Limited at the end of the financial year, 29 February 2012. The entity is in the clothing industry and they give you the balances as at 29 February 2012. Then they also ask you, required, prepare the statement of changes in equity for the year ended 29 February 2012, the following notes to the financial statements, share capital and loan, and then lastly, prepare the statement of financial position as at 29 February 2012. Now, I could have asked you only prepare the statement of financial position as of 29 February 2012, and yeah, that's it. And then you should have known by yourself that you have to do the statement of changes in equity first before you can actually complete your statement of financial position. And if I just ask you to prepare the statement of financial position, it means that you have to prepare the notes to the financial statements as well. So therefore, you should have known to do A and B by yourself if I only asked you to do C. So make sure that you understand that. Good, so this is year-end balances. They give you order share capital with a question mark. Share premium. Now, share premium, immediately if you get a share premium account, tells you that somewhere I have shares issued at par value. So there was certain shares that was issued at a higher price than what the par value of the shares were. Then we get 10% preference share capital, retained income as at the beginning of the year, the loan as at the beginning of the year, source income tax balance as at the beginning of the year. So we owed him, it's a credit balance, so we owed him 23,000 Rand at the beginning of the year. Debtors control, creditors control, accrued income as at the end of the year. Accrued expenses as at the end of the year. Expenses paid in advance as at the end of the year. Income received in advance as at the end of the year. Bank, a credit balance, a savings account, interim, ordinary and preference dividend paid. Interim means it has been paid somewhere during the course of the year. And then land and buildings. Now, additional information. Number 1, the authorized share capital, very important, consisted out of 500,000 ordinary shares at a par value of 5 Rand each and 100,000 no par value 10% convertible preference shares convertible at the discretion of the issuer. Let's just stop there for the moment. So the preference shares are no par value shares, so there cannot be any share premium associated with preference shares. However, the ordinary share capital has a par value of 5 Rand each. So guys, very clearly that 30,000 there belongs to the ordinary share capital because that is the only class of share that I have that has a par value attached to it. Okay, now the issuer. How many shares have been issued? Now, firstly, there was issued 16,250 preference shares at the beginning of the year. On 1 March 2011, this is the beginning of the year, 60% of the authorized ordinary share capital was already issued. On 29 February 2012, the company issued another 100,000. When is 29 February 2012? Right at the end of the year. The company issued another 100,000 shares at a price of 6.80 Rand per share, 680 cents per share, after the existing ordinary shares were converted into no par value shares. So right at year end, what happened? They said at the beginning of the year, 60% of that 500,000 shares were issued. So let's write it down here for us. 60% of 500,000 equals 300,000 shares. At what price, guys? At 5 Rand per share. Because that was the par value, and only the par value of the shares could have been taken to the share capital account. They actually give me share premium as at the beginning of the year. So what does that mean? That means that that share premium account equals 30,000 was paid on 300,000 shares, which was an issue at the beginning of the year. Further shares was only issued after the par value shares were converted into no par value shares. So that 30,000 belonged to those shares in issue right in the beginning of the year. So that means that those shares were actually issued at a premium of 10 cents per share. 300,000 shares multiplied by 10 cents a share would have given us 30,000 Rand. So let's just wait a minute and let's start with our statement of changes in equity, and let's complete the opening balances in our statement of changes in equity. The name of the company, HP Limited. Statement of changes in equity for the year ended 28 February 2012. We will have for ordinary share capital column, and in that column we would have recorded the 300,000 shares issued at a par value of 5 Rand each. So 1.5 million. They gave us the share premium of 30,000, so we can just insert the 30,000. Then for the preference shares, they've told us that 16,250 of those shares were already issued in the beginning of the year. Now, if we read the paragraph further, we have issued a further 100,000 ordinary shares during the course of the year. We might as well complete that. 100,000 shares issued, 100,000 ordinary shares, but maybe we should just wait a little bit with that. And then they told us further, if we read further, after the existing ordinary shares were converted into no par value shares. So what happened first? First, the conversion of the shares into no par value shares has happened. So what do? I transfer the capital amount out of ordinary share capital, and I transfer the share premium attached to that share capital. Sometimes share premium can also be applicable on preference shares. In a case like that, you only have one share premium column in your statement of changes in equity. And you can only take out of that share premium account the share premium that belongs to that share which is now converted into a no par value shares. Here the full amount is applicable on ordinary shares, and the full amount is applicable on all those ordinary shares because all of them were converted into no par value shares. So I take out the 30,000, I debit share premium, I debit ordinary share capital, and I credit declared or stated ordinary capital account. So here I have now 1530. Good. So the conversion took place. After the conversion took place, we have issued 100,000 additional shares at 6 Rand 80 per share. Yeah. On 29 February, the company issued another 100,000 shares at 680 cents per share or 6 Rand 80 per share after the conversion took place. They tell us the amount received was bank, but no further entries were done. So our bank account is fine, it reflected the amount, but our premium account, our capital account, there is a big question mark. We still have to record that, and there's in case a question mark, you have to determine what the balances are. Okay, on the same date, it was decided to convert 50% of the preference shares into ordinary shares at a price of 5 Rand 20 per share. Now, in issue was 16,000, and then they tell us no entry has been recorded yet regarding the conversion. So that means that this balance of 65,000 Rand of 10% preference capital was our opening balance, because the only difference or the only thing that happened to preference shares was that there was a conversion of 50% of those shares into ordinary shares, and there was no entry as yet. So therefore that must be the opening balance. So 65,000, preference share capital 65,000. What happens at year end? We are going to convert 50% of that into ordinary shares. Remember what I've said about share conversion. If I convert one class of share in another class of share, I simply move capital from the one to the other one. There can never be a premium involved. I can only move whatever is lying in the capital account. So what happened is that 50% of my preference shares were cancelled. And we've told those preference shareholders, you no longer have pref shares with us. There is no pref share certificates for you. But not to worry. In exchange for those preference share certificates that you held, we are going to give you now ordinary share certificates. The value of the preference capital that was cancelled was 50% of the 65,000, i.e. 32,500. So we are going to issue to you ordinary shares to the value of 32,500 Rand. The question says the share price of those ordinary shares, which was now issued in exchange for the pref shares, is 520 cents per share. So how many ordinary shares did we have to issue in order to make good that 32,500 Rand worth of pref capital which was cancelled? Well, 32,500 divided by 5.20 Rand gives us a total of 6,250 ordinary shares which were issued in order to, in exchange for those preference shares which were cancelled. Right. Now we're done with that one. Number 2, the directors have general authorization to issue shares until the next annual general meeting. Now this is a disclosable fact. Once we're going to get to the disclosure, I'll show you where we're going to disclose that. Then the profit before tax for the year amounted to 316,000. Guys, what do we take to our statement of changes in equity? Profit after tax. The amount owed to SARS on 1 March 2011, now that is, if you look at your trial balance, 23,000 which was owed to SARS at the first. And they said to us it was paid on the 7th of March. So if we're going to draw the receipt of revenues account, you will say that they had an opening balance of 23,000 Rand, which was paid on the 7th of March, 23,000 Rand. Then I said that there were certain provisional tax payments which were made during the year. On 31 August, 43,000, and on 27 February, 45,000. So what is our accounting entry? We're going to credit bank and we're going to debit the receiver of revenues account. So on the 31st of August, we credited bank, we debited this account, which is either an asset or a liability account. So it's a statement of financial position account. So we're going to debit this account with a 43,000 provisional tax paid, and then on the 27th of February, we're going to debit this account with 45,000 and credit bank. Guys, if you're going to put provisional tax payments in the income statement, minus 2 marks. It is not an income statement item. What is the income statement item? Our tax charge for the year. What is our tax charge for the year? Our tax charge for the year must be calculated at 28% of profit before tax. So our profit before tax equals 316,000. So 316,000 multiplied by 28% is going to be equal to our tax charge for the year of 88,480. So what do we do with that? We take the 88,480, we debit our income tax expense account, and an expense account is at the end of the year closed off against the profit and loss account. So in my income statement, my tax charge for the year equals 88,480. and I'm going to debit my income tax expense account, and I'm going to credit the receiver of revenues account. I owe him that amount, 88,480. Now I can determine what is the closing balance on my receiver of revenues account, and that is 480 Rand. So we have to do the statement of financial position. We have to show income tax liabilities separately under current liabilities. So under current liabilities, we're going to show SARS, income tax, 480 Rand. That income tax expense, we now have to deduct. We're going to post it to our profit and loss account. So it's going to reduce our profit before tax. So what is going to be our profit after tax then? Going to be then 316,000. You can do it in two ways. You can say multiply it by 72%, and that equals then profit after tax of 227,520, or you could have said 316,000 Rand less 88,480 equals 227,520. What do we do with profit after tax? Profit after tax, we post to our statement of financial changes in equity, and we're going to reduce our retained income, or increase our retained income rather, with our profit for the year. So profit for the year, there I say 316,000 times 72%, 227,520. Dividend withholding tax is 20%. 30% of the ordinary and preference shareholders are South African resident companies. Now what does that mean? It means that those 30% shareholders is exempt from dividend withholding tax. All our other shareholders, i.e. 70% of our shareholders who received a dividend, has to pay dividends. Now, in our trial balance, we have an interim ordinary and preference dividend which has already been paid somewhere through the year of 135,000 Rand. And then they give us the particulars of our final dividend for the year. So in our statement of changes in equity, we're going to have to declare what is the dividends were. So dividends, the interim dividend was 135,000 Rand. The final dividend was 35 cents per ordinary share, and that was declared at year end, 29 February 2012, but has not yet been paid or recorded. Shares acquired during the year did not participate in the final dividend declared. That includes the shares acquired from the conversion. So the only shareholders who were entitled on that interim dividend was those 300,000 shareholders, those 300,000. And the ordinary dividend that they were entitled on was 35 cents a share. Now remember, we paid an interim dividend already during the course of the year. So 6 months during the course of the year, we have paid a dividend. So therefore, we also have to make provision once we declared an ordinary dividend, by implication, we've already declared the preference dividend. So for the last 6 months of the year, we also have to provide that 10% pref dividend. So our total dividend for the year on the ordinary shares is going to be the 300,000 shares at 35 cents, which is 105,000, plus on our pref share capital, it was the 65,000. Remember that conversion took place right at the end of the year. So that 65,000 Rand worth of share capital became in line for a 10% dividend. So that is then 65,000 multiplied by 10% multiplied by 6 months. Remember, a pref dividend is at the end of the day time-based. So therefore 6 months, 3250. So the total dividend that the company declared was 108,250. So in my statement of changes in equity, the amount of dividend that I'm going to record, you could have added it together, you can show it separately as well, is the total of 108,250. Now the liability of the dividend that was declared needs to be determined by us. Remember, the interim dividend has already been paid, there's no liability for that as yet. But this dividend was declared, still have to pay the shareholders, and we also have to pay the receiver of revenue the portion of the shareholders' dividend which actually has to go to him. Now they tell us in the question that 30% of our shareholders are South African resident companies. So therefore that they are not subject to dividend withholding tax. So let's deduct then that percentage, 30% of 108,250, which is not subject to dividend withholding tax. The remaining amount, the 75,775, those shareholders has to pay 20% dividend withholding tax. 75,775. And that then gives us a total of 15,155. So, who is not going to pay? The total amount of 108,250 was declared. 15,155 has to be paid over to the receiver of revenue. So 93,095 will be paid to our shareholders themselves. Please take note that this 15,155 is not a company tax. It's a tax that the shareholder pays on the dividend that he is due to receive. So in our statement of changes in equity under current liabilities, shareholders for dividends, 93,095. There you have it, 93,095. And then directly underneath that, SARS, dividend withholding tax, 15,155. 15,155. Guys, add 15,155 with 93,095. And at what figure are you back at? At the 108,250. So can you see that when the company is going to make payment, what is he going to do? He's going to debit shareholders for dividends with 93,095. He's going to debit SARS for dividend withholding tax of 15,155. And he's going to credit his own bank account with 108,250. So how much dividends did the company pay? The company paid 108,250. Therefore, we're back there, 108,250. We have to do the loan note as well. So the loan statement indicated the following. The balance on 1 March 2011, beginning of the year, was 150,000. There was interest capitalized for the year of 18,000, and there was payments made to the loan account, i.e. capital payments made of 50,400. So if we're going to do this, a small computation, what is going to be outstanding capital amount at the end of the year? Now that is just going to be the answer there, and that equals a total of 117,600. Go. Oh, go away. 170,600. It is expected that the loan will decrease during the following financial year by 4,000 Rand per month, and that is only a capital payment. So therefore 4,000 multiplied by 12 means that the short-term portion of the long-term loan is going to be equal to 48,000 Rand. So when we do the loan, the disclosure of the loan in our books, find it, is going to be as follows. Balance at year end, 117,600, less short-term portion transferred to current liabilities, 48,000, and the balance at year end then 69,600. You also have to do the statement of financial position. So under non-current liabilities, you're going to show long-term loan, 69,600. You are going to show, short-term portion of long-term loan, short-term portion of long-term loan, 48,000, that is, that's 69,600 plus that 48,000 is going to be equal to your total outstanding loan at the end of the year of 117,600. Okay. The loan is secured over land and buildings. You have to note that. You also have to note the interest rate applicable and bears interest at 12% per annum. Payable per annum. Payable in capital payments of 4,000 Rand per month. Okay, so now you have disclosed all the particulars surrounding the loan. Great, so let's do then the note before we get to the statement of financial position of share capital. And here you have to take note that you can do this 100%. The first thing that you have to disclose is authorized share capital. Now, you will have to have a proper heading. Here is no proper heading, and you will be penalized if you don't have a proper heading. So how does a proper heading looks like? You will have there's notes, the name of the company there, HP Limited. You will have notes in the financial statements, and there you would continue for the year ended 29 February 2012. In Afrikaans, notas tot finansiële state. Alright. Great. So a proper heading. Then share capital. The first thing that you have to show is authorized share capital. Now what is important here, do you see that there are no amounts? The only thing that you have to disclose is the number of shares. So if you go back to the question in that paragraph where they give us all the information, I am authorized to issue 500,000 ordinary shares. So 500,000 ordinary shares. I am authorized to issue 100,000 no par value 10% convertible preference shares. Only the number of the shares, 100,000 non-par value convertible preference shares. The next one that you have to show is the issued share capital. So issued, and very important, only the number of shares. Only the number of shares. Now at the beginning of the year, we have said that there was 300,000 ordinary shares issued. So 300,000, 1 March 2011, 300,000 ordinary shares. At what price? Well, that one we have actually calculated. It's at R5.10 per share. We said it was 300,000 shares at the par value of R5 per share, plus that 30,000 gives us a 10 cents premium. So that is where the 10 cents, R5.10 are coming from. Then right at the end of the year, you have to show the dates. Do you see that? We have issued a further 100,000 at R6.80 per share. And that gave us 100,000 shares. It is the number of shares that we have to use. Then right at year end, if you remember correctly, there the conversion of shares took place, and that actually equaled 6,250 shares which were issued. So here the additional 6,250 shares were issued when the shares were converted at R5.20 per share. So in total, we had 406,250 shares in issue at the end of the year. Do you see that here is no Rand value? Great. Then what we have to do is we have to finish off our statement of changes in equity, because here we have accounted for all the Rand values, and we have to determine what our closing balance of that was at the end of the year. Now we can start just completing our statement of financial position. A proper heading. HP Limited, Statement of Financial Position as of 28 February 2012. Very important, 2012 Rand. We have done IS1. You can see now why it is so important in order to write that there on top. If you don't, you're going to lose unnecessary money, marks, and if you do, you're going to get Mahala marks. Right, assets, non-current assets, property, plant and equipment, that is land and buildings 2606,455. Current assets, trade and other receivables. Now if you go back to your trial balance, you had the debtors control there of 5640, you had accrued income there of 340, and you had expenses paid in advance of 765. Now if you add that all up, that gives you total trade and other receivables of 6565. If you have listed it here, 0 marks, 0 for your attempt. You know that you have to group it together. Then cash and cash equivalents. Now that is only our savings account of 4,500 because we had an overdrawn bank balance. So only the 4,500 would have appeared there. Total assets, 2617520. When we go to our equity and liability side, ordinary share capital. Now guys, that is why I need my totals. Ordinary share capital, 2242500. Those two are out of the equation. The next one, 10% preference share capital, 32,500. 32,500. And the last one is my retained income, 63,270. Retained income or earnings, 63,270. We've already spoken about our non-current liability, which is our long-term loan, our trade and other creditors. Let's have a look what that is. On our income statement, on our trial balance creditors control, 12,540, accrued expenses, 850, and income received in advance of 890. Only one total will be marked and you will get marks for only one total. If you showed it separately, no marks. Good, shareholders for dividends and source dividend withholding tax we've spoken about. And then the only other thing that we have to account for is our bank overdraft balance, and that we have here as well as 38,640. So that then I balance my total equity and liabilities equals my total assets. So I'm done.